Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I've got a question here that I want to answer. It says, where would you say we are in the commodity move? And behind me, this is on Twitter, it says Commodities, January 2022. And they're pointing here or here is what they have for Miner Mug. And he's replying to me, Finding Value or Finding_finance. And if you guys want to follow me on Twitter, it's at Finding_finance. If you want to follow me on Twitter, because I do post some things on there. Sometimes I put up. Here's my profile. I do retweet a lot of stuff. I also post potential opportunities on there if you guys want to. Here's Yancoal breaking out and ready to really move higher. Yancoal looks absolutely excellent. So if you guys want to follow me, definitely create a Twitter account to get on there and follow me at Finding_finance if you want to follow me. So that the question I'm answering there is this question. Where are we in this pattern? So what I did is I created my own little thing here. This is the smart money, institutional investors, public, and whatnot. We are nowhere near anywhere in the media attention public phase. I don't even think we're really I think we are still going from a stealth phase into an awareness phase. So I think we're at the takeoff phase here, right at the beginning. And why do I think that? Why do I think that we are at a takeoff phase and we're not even over on this right-hand side? Well, when you correlate this, the last bull market in commodities, looking at the housing starts, happened in 1970, like this portion here, all the way to this bottom where we would have a sell point. The other one started in 1999, 1998, when in this section in here, where the beginning of the bull market of commodities was here and the top was in 08 over here. When looking at where we are positioned in the expansion phase of real estate and the last two commodity bull markets, we are right at the beginning of the bull market of commodities. We're at the beginning of the beginnings. This is like inning number 1. So we can't be at inning number 5 or 6, where you go vertical at the end of the bull market, in the middle to end of the bull market. We are right at the beginning. So this is the first stage. And why do I think we're at the first stage? Let's get more data to compile here. Why I think that we are somewhere in this kind of takeoff phase between the stealth phase and awareness phase. Looking at the commodity ratio, this will tell us roughly where we're at. We are at the preamble in 2020 below the beginnings of the last bull markets. We are lower than the beginning of the 1999 and 1971 commodity to stock ratio valuations. We are at lower valuations than the beginning of the other two commodity bull markets. So if in this bull market, we may be here, but we would be at the stealth phase, below the stealth phase of the other two bull markets, because our valuations are lower than those. There's more money in the system and it's more misallocated this time than any time in history. So that's what this commodity to stock ratio is telling us. And I pulled a real-time commodity to stock ratio. Does this look like we're in any sort of late stage of a bull market? We are just turning up, guys. We just broke the downtrend of the CRB to S&P 500 and are starting to move up. This is the beginning of the beginnings. This is all of the gains are ahead of us. We're nowhere near the middle of this bull market. Now, looking at some of the pricing, I pulled up SM Energy because it's my favorite. If you were to look at the last market, and we had the 1, 2, 3 hump, this was ready to break in 2019, late 2018, 2019. We were about to break to the upside for SM Energy. We had this medical event problem that brought us all the way to the bottom here. We're coming back up, and we're right basically at the beginning of that market. We are just starting the bull market, in my opinion, of commodities. This was a detour. So I would say that we're at like the beginning breakout. We're at inning number 1. We're just starting to start the game. This is Northern Oil and Gas with a massive descending wedge pattern, and we just broke to the upside of that pattern. We're at the beginning of this game. We are just starting this game, and it's showing us that commodities are going to outperform. This is your large accumulation phase of all of these people accumulating Northern Oil and Gas. Again, we're at the beginning of the phase. Here is the Global X Uranium ETF using uranium as a gauge. We are at the beginning of a bull market as we just broke out, and we're just starting to move higher. We're getting our return move right here, and eventually we're going to move far higher. We're just getting a little return move. Here is Intrepid Potash, looking at Intrepid Potash. We just broke the downtrend, guys. We just broke it, and we're doing a little bit of sideways action. This doesn't look anywhere near like a top or anywhere near a phase that we're going to start a blow-off phase. This is going to slowly work itself higher for a while and then have a blow-off in probably 5 or 6 years. We're not going to have the large moves yet. The only reason we have the large moves in, say, some of these oil companies is because they were so screwed up. This was like a massive detour because of a problem in oil. And then it just came back to what I would consider to be still an undervalued state. So it went from extreme values to undervalued. So that's IPI. Looking at the platinum to gold ratio, this is a ratio that indicates where you are in a commodity bull market. If you're moving in a commodity bull market, it's going to go up. And it's going to be at a ratio more like 1 to 2. Or I should say, 1 ounce of platinum can buy 2 ounces of gold. We are down at 0.53. We're just about to start this bull market. That's what this is saying. This is just about to start where commodities are going to outperform stocks. It's just at the beginning. And looking at the Dow Jones to gold ratio, what happens is you peak out at these tops, you come all the way down. It came into an environment where the housing market was unfavorable for commodities, and we're about to head lower. This hasn't really started yet. So this move here is going to be the same as this move here, and we're probably going to compress all the way down to the bottom of 2, like down to 2 or something. Something on the lines of that. So we have a huge compression. We haven't really started compressing this in any sort of meaningful way yet for the Dow Jones to gold ratio. So when looking at all this and going back up to this chart here, in my opinion, we are not on the institutional investors phase even. We're probably still in the smart money to institutional investor where this takeoff is. We're probably somewhere in this phase in here. I don't think we're at the bottom of the stealth phase. I think that happened in 2016, 2017, 2018, and I think we're starting to enter the takeoff phase, which is this phase right in here, the awareness phase where people are going to start to become more aware. You're going to start seeing institutional investors prefer it. You're going to start seeing more. You're going to start seeing it in more of the mainstream news. Then it's going to go mainstream eventually. We're not at that point yet. So with all of the data that I just went through there, all of these charts, we can't have valuations. We can't have no money in the sector and be in a institutional investor phase. They have to actually move their money over. We have not had that happen yet. It's starting to happen, but it hasn't happened. The institutional investors aren't here yet, and the public is definitely not here. They're nowhere near commodities. They're still trying to figure out what cryptocurrency they're going to buy, and talking about the metaverse and all these other things. And speaking of the metaverse, and I'll just make a comment there. Be careful, guys. I mean, that is a synthetic world developed by humans. All of our genetics, all of our being was based off of our adaptation to our surroundings. Our eyes developed, our genetics developed, everything developed around the world that we live in. Now, if you completely engulf yourself in something as synthetic as a metaverse, just be careful, because I don't know how your genetics are going to react and go to that. And they could be putting subliminal messages in that area or in that metaverse that are going to change you. So I just be careful. That's all I'm going to say. But that's where I think we're at in the cycle. That's where I think that we have a long way to go. We have a long valuation runway ahead of us. We have a good amount of time ahead of us too. And there's still a lot of time to refine and position where you think you want to be. I took advantage of this. I tried to buy the lowest possible prices that I could. And I think we are still incredibly early, earlier than what most people think. And remember, you guys, a lot of people, they get into, say, like my channel and some other people, and you guys are immersed in this. So you think that a lot of people are in the uranium sector. You guys think a lot of people are in oil and commodities. Your world is focused on the commodity sector and all the people that are in it. I'll call it all the forward-thinking people. How about that? And there's still people that are hanging on and clinging on to the technology sectors. They're going to get smoked. They're just rolling over, coming down. This is the beginning of the rotation of money. And that rotation of money is in the beginning of the institutional investors. So institutional investors are rotating out of technology stocks, and that's why they're coming back down. And they're starting to position in commodity-related things. And gold and silver haven't taken off yet. That's kind of the middle phase, I would say, is when they start to take off and start moving. That is the middle phase of a commodity bull market. They have not done that yet. We are not in the middle phase yet. So the first phase is you get the energy sector, you get some of these guys starting to roll up, you start to see inflation pick up, which we have. We're at the beginning of that phase. Technology starts to sell off as interest rates go up. We're right there at that beginning of that phase, which puts us in the beginning of the institutional investors phase. Once we start getting really good traction and those ratios start to move, and they will move dramatically under this institutional investors phase, you're going to get one little scare, which is the bear trap, and then you're going to get a blow off top. That is still years away. We're not there yet, but we're going to get really good gains. We're going to get good compression. We're going to get a lot of movement. I just think that, it may be a few years away before all this, before the big move at the end. And I'm going to help you manage through this. I do think that we could even have pullbacks now, still large pullbacks with really good buying opportunities in some of these sectors. It's still possible. What happens is you kind of get your first wave. You get a good size pullback. That's probably what they mean by the bear trap. And then we get a big third wave and then a fifth wave. And this can change on the top here. This hump here can move above it. This hump right here that you see is happening right at the top here, in my opinion, in Bitcoin. And I don't know how Bitcoin's going to react. Everyone thinks it's an inflationary hedge. I don't know if I'd take that viewpoint. I think it might be tied to interest rates. So I don't know. It might be acting like the NASDAQ as a technology type company. I don't really want to know. I don't care. I'm going to go with what's proven in history, which is commodities do well under this type of environment. And that's where I'm putting my money. So that's my opinion. Let me know what you guys think about my opinion. Put it in the comment section and what your guys' opinion are. Like to hear your guys' opinion. Give me a thumbs up for the content. And thank you for listening. This is Finding Value.